Welcome. My name is Van Richards. I'm a chartered financial consultant, and today we're talking about VMware. So let's get started with today's daily stock analysis. Okay, today we're talking about VMware, and that might be a stock that you're not as familiar with, but this is an awesome stock. It's undervalued for the market right now. It's a tech stock. It's tied to Dell significantly. So let's talk just a little bit about what VMware does and how they operate. But before we begin into that, I want to kind of bring in something that I have been developing over the past week. I took the week off, and it's great to be back and to talk to everybody today. But I've been working on something from my personal financial planning practice. It's called the Prosperous Planning Process. And in this particular process, what I do is I help people to plan for the future that are frustrated with the way that their finances are right now. Amazingly, there's a lot of people out there that are making good incomes, but they're not really managing everything very well. If that describes you and you're in Texas, that's the area that I service personally, go over to my website at richardsfinancialplanning.com and you can learn just a little bit more about the prosperous planning process. Okay, so let's go ahead and begin in and talk about VMware today. Let me make the screen just a little bit bigger with you. What I've done is I've made a very short video. This is less than 20 seconds long, and this is going to give you a little bit of an understanding of what VMware does. So let's get into that. Now, VMware is a really big company. They're a little bit over 59 billion, probably with the way the market was today because they fell in value. They're probably right around $59 billion, but that's a significantly large company, and they have a significantly large footprint in the technology arena. Essentially, what they do is they create virtual machines. If you've ever used a Apple product, let's say, for example, that you've got a Mac and you want to run Windows off of that, you run Windows on the iOS system, which is on a virtual machine. It is a software program that operates within a software program. So it offers a lot of different opportunities. It also offers opportunities for cybersecurity where an analyst may be wanting to run a particular type of program that could be dangerous to their entire system. So they will run it inside of a virtual machine that will help to protect the system. So there are a lot of applications that are for VMware. Now, if that's a very basic explanation of what this company does. There's obviously a lot more to it, and I really think that it's an under-recognized company that's undervalued right now. And we're going to talk about the valuation in a moment. But if you have an interest in learning a little bit more about what virtual machines are, here's a free book for you. Go to VMware.com. That's actually VMware's website, and download the book that they have. It's kind of interesting. I looked at a little bit of it and I found it very intriguing. It's called Modern Infrastructure for Dummies. Well, that would qualify me. I'm just analyzing stocks. I have no idea exactly how that virtual machine works. So if that's something that interests you, go on over and take a look at it. What we're going to look at when we look at this particular stock is three different items. This is the way that we approach analysis of stocks every day. We look at stability, earnings, and competitiveness. Now, when we look at the stability and the earnings of this particular company, it's moved forward by what's called a moat. Now, a moat is a concept that has been made very popular by Warren Buffett. This is what a moat is. Take a look, if you would. Note that moat is the invisible barrier that is in between the company and their competitors. And in this particular situation with VMware, the biggest advantage that VMware has is that their software, their development, their licensing process, all of that that works with a company, whatever company it would be, is integral to its operations. It's considered mission critical in data centers, especially. So when we talk about the switching cost is going to be the fact that it's a critical operation, and to change it could be quite precarious. It could actually, there could be lost data. There could be a lot of other circumstances that would be unknown. So switching cost is probably the biggest advantage that we see right now with a Moat. Okay, the other thing is that it makes it a moatiness. In other words, it's a benefit is the fact that they have virtual machine knowledge, which is unique. Now, one drawback that may reduce the valuation going forward of VMware is if Dell is actually an 81% shareholder in VMware. So you could say it's a subsidiary. They control everything that goes on with it. But there's been some talk about this company spinning off. So if it does spin it off, it would reduce the actual the valuation possibly going forward. Okay, let's take a look a little bit more now at the earnings of the way this company has worked. They just came off of their third earnings report at the end of November. And for the third quarter, their revenues were at $2.86 billion. That's an 8% increase year over year. Their license revenue was one of their largest profit centers, making $644 million. And then beside that is the sales and the SaaS, or the subscriptions as a service, and the revenues there was $676 million. That's about $1.32 billion in total. And that says that those two particular areas all by themselves represented a 10% year over year revenue growth. Now, let's see what it did to the actual earnings per share. And we're going to look generally at the graph in itself. Now, the wiggly little line you'll see here, the circle, the elliptical circle, is on top of the bad earnings. Now, the bad earnings, when did they come? They came right at the coronavirus market crash in the beginning of 2020. That seems like so long ago, and hopefully it'll end soon. But what was really interesting was what happened after that. Analysts came in and said basically they thought that VMware was going to have a bad quarter going forward, but VMware surprised everybody and they had significantly larger earnings. Now, one thing that you want to be aware of is what's going to happen in case the news is true that Dell actually absorbs or sells off VMware. Now, this is a report that we saw that came out earlier in the year. Let's take a look at that. If we look actually all the way back to July, this hit the news in July. And at that point in time, it did give a bump to Dell stock, and it gave a bump also to VMware. And it was the rumor, well, it actually came directly, I believe, from Michael Dell, so it's more than a rumor, that they were interested in completely spinning off the company. Well, that's kind of died down since then, and we haven't heard any more news to it. But at that point in time, it did increase the valuation significantly on Dell. It did a little bit on VMware, but not as much. So what would happen if VMware is actually spun off? One of the things that may affect the valuation of the company going forward is that part of the deal would be a significant one-time dividend that would be paid out to shareholders. Of course, the biggest shareholder is Dell at 81%, and you, if you happen to own the particular stock. But if that dividend is paid off, essentially it's going to be so that Dell could take that cash and pay off particular debt. It hasn't happened yet, and the rumors of it has kind of died down a little bit. So who knows if it's going to happen. But if you look at really what the analysts are saying about this stock, they're taking a look beyond actually the rumors, and they're looking at the fact that VMware is such a dominant player in the virtual machine arena. They have a hybrid cloud program that could possibly dominate the cloud and could make the valuation of the company even more going forward. Their growth in infrastructure, their user end, their security, and their software networking are all areas that are under development. So when we talk about growing a moat of a company, this company, VMware, is being very proactive in growing areas other than just virtual machines in the particular cloud that we're talking about. The Dell relationship right now, actually, that they're owned 81% by Dell, is working well to their advantage. And the biggest advantage in that is that they are actually cross-selling on customers. Dell customers can sell off of VMware, and VMware can sell off of Dell customers. So it's working pretty well to their advantage. Now, when we look at what some of the analysts are saying that are looking at this with the jaundiced eye, they're saying that there are large enterprises that utilize VMware that can actually develop their own software programs and their own virtual machines. So if we're looking at it from that standpoint, that could be competition going forward. There are other companies. Now, in a few moments, we're going to take a look at a graph that's going to show you some of the other companies and the large companies that are competitors. Microsoft Azure is one of the largest software companies development that could compete with it. HP also, and Oracle. And then the other thing is what's going to happen to the valuation of VMware if Dell actually sucks off a lot of the cash out of the company in itself. So those are all things that are up in the air. Now, when we look at what the valuation is from the analyst aspect, the first company that I look at for information is actually Morningstar. I think that Morningstar is probably one of the most conservative analyst companies that's out there. And if they're saying that this is undervalued, I think that it's really undervalued. The price of it right now, as you saw earlier, closed today at $139.89, and they're pegging the fair market valuation at $202. That's meaning that this stock is trading, in Morningstar's opinion, around a 30% discount. Now, this is really interesting if we go back over the past few years and look at the graph of what's been happening. And I'm not really big into technical analysis a lot. I like the idea of fundamental analysis. Technical analysis looks a lot more at the graphs, but when you look at the graph that's in front of you from a technical standpoint, you can see that right here where the dancing cursor is, this is where we are. And you can see that the fair market value is actually over top of actually the fair market value is under what the current market value is. So what's that telling us? That's telling us this company is actually trading at a discount right now, and it's been trading at a discount for about a year now. So I think that it's really poised to go forward and to move up in value. So let's take a look and see what actually the analysts are saying on this particular stock. Out of 19 analysts that have issued information on this stock, 13 of them are saying that this is a strong buy. I love ringing the bell. But the idea is I don't always get to ring the bell. There's a few holdouts there. 2 analysts are giving it a moderate buy, and 4 of them are actually saying that it's a hold going forward. But I think it's actually fairly undervalued, that is. Now, let's look at actually what the other companies are, what their competition is. Remember the SEC, we look at the stability, the earnings, and the competitiveness. We've looked at the first 2. Now let's look at the competitiveness of the company. Probably the closest company right now as far as virtual machines go, maybe that's not a fair statement to make. I was going to say that Citrix is probably the closest to it, but I think that's because Citrix is probably more narrow in its operations than some of the other companies. When you look at a company like Microsoft, Microsoft excels over top of all the other companies, but Microsoft does so much more. It's like an Amazon. They do so much more than just the virtual machine development. Also, when we look at, let's go a little bit more and look at Oracle, and then HP. HP is also a competitor. And when we look at VMware, down at the bottom, actually VMware, in my opinion, is the most undervalued of all 5 of these companies. And I really think that it's poised to have some good value going forward. Let's take a look at the last few years at the actual valuation of this particular stock. A year ago, this stock was trading at 153.85. Of course, as I've noted, it closed today at 139.89. So if you were in this stock a year ago, you've lost about 9.07%. Now, I always say the past performance is no guarantee of a future result when we've got a negative return. We hope that it's not. But let's go back a little bit further and take a look at the 5-year history on this particular stock. 5 years ago, it was at $49.52, almost 53 cents. When we look at what it's trading at today, at that 139 number, that means that over the past 5 years, it's returned 182.45%. The APR, the annual percentage rate, has come out and averaged to 23.08. Not too bad. Didn't do good last year, but over the past 5 years, they've done extremely well. At this part of the presentation, the show that I do for you, I really take a look at what the other analysts are saying on this stock. Now, we know right now the stock's trading at about 139, 140. If we look at what the other analysts are saying, the yellow line is the most conservative analyst, and that's from Muzo, and that's trading. They're saying that it's going to trade in between 147 and 152. That's their target. Remember, it's at 139.89 right now. And if you look at the most aggressive, the most forward-looking valuation, that comes from Barclays, and they're putting the price in between 180 and 187. So I really think that this stock is poised to go higher as we're going forward. And just remember, when you look at any of these stocks, we come back to what the valuation process that I use. And the method, the recipe is this: it's stability, earnings, and competitiveness. When you look at all those different things, then what that's going to do is it's going to give you an indication as to whether that this stock is a good stock going forward or not. At $59 billion, it's an established stock. They have an integral part of the way that the operations of many companies work. The idea of virtual machines is something that's developing, and it has a lot of applications going forward. Again, if you want to learn more about virtual machines, they've got a free book over there at VMware.com. That'll help you out. Well, I hope that this has been good information for you. Thanks a lot for joining me today. And if you've got questions or comments, be sure and enter them into the comment section of YouTube. That's the one that most of you follow, and I appreciate that. And if you've got stocks that you like, go ahead and put them in there. I might be able to enter in and get some information for you, and I might not. It just depends. I know that there's a lot of you that are putting in requests for stocks, and I haven't been able to follow through on it, and I apologize for that. But the way that I do my analysis of stocks is I take a lot of the information from other analysts, and I compile that to give you the average. And if there's not a lot of information, if it's a stock that doesn't have a lot of following, that doesn't mean it's a small company or a negligible company. That just means that it might not have a lot of following from analysts, that I don't have anything to report to you. But continue to enter in your information and your request and follow, and I appreciate it. So we'll talk to you tomorrow. Have a great evening. Stay tuned for the disclosure.